Hi everyone, it's me again, Athena, and I'm back here again for the part 2 of this video where we dive deep into the details of one of the financial statements, which is the balance sheet. Before we begin, if you need any accounting help, feel free to head over to pearlemonaccountants.com and we'll get in touch with you. Let's begin. We first explained the first part, which is the assets. Now let's go into the liabilities and shareholders' equity. An important thing to note here is that the values of the asset, as you can see here, 323,888, is also the same with the value of liabilities and equity. As you can also see here. So let's look closer to the liabilities and shareholders' equity. It's first divided. This is the liabilities. And this is the equity. Under liabilities, we also have current and non-current liabilities. And if you remember, under assets, we also have current and non-current. So current is for short term. So this is under 1 year or less, or one operating cycle. And non-current liabilities are long term, more than 1 year, or more than one operating cycle. And under current liabilities, we have one of the most common, which is accounts payable. This is kind of the opposite of accounts receivable. So here in accounts payable, it is something that you have to pay to another party. So for example, you bought a furniture and you bought it on credit. You're supposed to pay it next month. So you have a debt. You have to pay for it in the future. Other current liabilities, and we also have deferred revenue. And deferred revenue is basically a service or goods you already receive payment for, but you haven't delivered nor rendered services yet. So it's a liability. Another example is a commercial paper, also term debt, and that is the values here are totaled. And for non-current liabilities, we also have term debt, but this one is again long term. Then you also have other non-current liabilities. This is also total. And these two, the non-current and the current liabilities, are added together and you will get the total liabilities. Under equity, this is an example of a company that is, it's not under partnership, it's not under sole proprietorship, but it's a type of corporation. As you can see here, we have all the stocks, common stock, and we also have retained earnings, and we have accumulated other comprehensive income, which is on a separate. And this one is also added. Sorry, this one is added, and the liabilities and equity are added together, and you will get the same amount, which is the same value under assets. So that's the deep dive in liabilities and shareholders' equity. Once again, if you need any accounting support, feel free to head over to perlemanaccountants.com and we'll get in touch with you. Thank you for watching.